Hello, this is Will Allen with Centera Capital. In today's market update, we are going to be talking about the latest data on the economy and in inflation and the Fed's fight against inflation. And speaking of that, there is a red flag in some of the most recent data. We are going to put that into context for you. You don't want to miss it. Let's dive in. All right, before we get into the first point on inflation, just a reminder to like and subscribe to the videos, and you can share it with any friend or family member who is not getting this kind of information. We appreciate it. So the first thing that we want to say about the most recent inflation data and the red flag is that there has been an uptick in the rate of inflation. So let's step back for a minute. We have over the last year been sharing about the fact that when prices skyrocketed in 2021 and 2022, the inflation rate went up, reached somewhere between 9% and 11 or 12%, depending on which measure of inflation you were taking a look at. That inflation rate had started to come down over the last year or so, and a lot of progress was made. Now, yes, prices were still very high and much higher than they were 3 or 4 years ago. We've talked about that a lot. We talked about that actually in our last video 2 weeks ago with Evan Temple. But the most recent inflation data that has come out, we are now seeing an uptick in the year-over-year inflation rate. So let's put this first chart up. And what you're going to notice is this is the CPI, the Consumer Price Index, year over year. And in the most recent data, it came in at 3.48%. This is year over year, meaning prices are 3.48% higher than they were a year ago for a basket of goods. Now, last month, this was at 3.15%. So you can see in that chart that we just showed up, this has been an uptick year over year. It is slight, but it's still something that we're paying attention to. Now, let's take a look at the inflation measure at a different time interval, looking at month over month. So we're going to put that up, and what you will see here is that in March, this came in at 0.4% over last month. This is now 2 straight months of inflation going up at about 0.4%. And you can see if you look back prior to that, you had had a string of basically 6 or 7 months out of the last 9-month period where that number was a lot lower. And the Federal Reserve was liking numbers coming in low. Now, though, the Fed is looking at the situation and saying, hey, we've had 2 straight months of 0.4% month over month growth in prices. We know now that the year over year has upticked from 3.15 to 3.48%. So it's something that the Fed is going to have to pay close attention to. Why does that matter to you? Well, the fact is that the Federal Reserve has been planning on cutting interest rates this year. A couple weeks ago, they met and they projected that they were going to be cutting interest rates 3 times this year. The market has, with this higher inflation data, the market's new pricing is saying that the Fed is only going to be cutting rates 1 or 2 times on the max. For consumers, a couple Fed rate cuts is a good thing because it brings down the rates for car loans or personal loans. It's going to bring down rates for mortgages mortgages are priced off 10-year Treasury bonds, but those are going to come down if the Fed's cutting interest rates. So this is something, again, that we are just monitoring, but it is something that is worth noting because, again, for the last year, it's been mostly good news pretty much consistently on the fight against inflation. Okay, point number 2 for this market update is the latest update on the economy, and specifically we're going to talk about the latest jobs report. Now, I want to take a step back for a second here and say that the news on the inflation front has some bearing on the news on the economy, and here's what I mean. The economy has been much stronger than what many economists were expecting a year ago. We've talked about the fact that last year 90% of economists thought there was going to be a recession. That didn't happen. The economy grew a lot stronger than can be expected. Well, when there is a lot of demand in the economy, that can drive up prices. It also can drive up commodity prices. And that's what we've seen in the last couple months. Oil has gone from $70 a barrel up to $90 a barrel. Gasoline has gone up. Copper prices have gone up a lot, and other commodities as well, because there's a lot of demand, and that's a good thing. So the Fed is going to have to take that into consideration when they're trying to decide Fed policy. They want the economy to do well, but they don't want inflation to kind of reignite. But as we're talking about the economy, I want to put up a chart of the most recent jobs report that came out last Friday. And we're going to put that up, and what you can see is we had 303,000 new jobs created last month. That came in much higher than could be expected. And if you take a look, you'll notice the last 4 months, jobs have been consistently very strong. Where last year between July and November, it was a lot lower, with the exception of September. So the jobs picture has gotten a lot stronger in the last 3 or 4 months. And look, there are people that sometimes are going to pick apart the composition of jobs and try to say maybe that's not as strong as what could otherwise be expected when you're taking a look at the headline number. But the fact is, we look at many different job indicators. The jobs openings data, which is nearly 9 million job openings, that's a key piece. We look at claims for unemployment insurance, which we talked about with Evan 2 weeks ago. That is very low. People just, the claims for unemployment insurance is staying very low because when people are getting laid off, they're quickly finding other work. We also look at wage growth, which, by the way, in this jobs picture, wage growth came in at 4.1% year over year. Again, that's higher than the 2 to 3% range that it was at pre-COVID. So the fact is, on the jobs front, a lot of good news, and that is going to power consumer spending. And by the way, that is playing out in the earnings picture. We also, with Evan, talked about earnings for the fourth quarter and the fact that companies earned a lot more profits than what was expected just 3 months ago. Sales also came in better than expected because a lot of companies are benefiting from consumers going out and spending money. So that is all good news on the jobs front and what that means for the economy. The other fact I want to point out real quickly is on construction, because we've touched on this a couple times over the last 6 months, is that typically when you are making a turn and going into a recession, a lot of times construction spending really starts to decline and there starts to be a wave of layoffs in the construction's front. That is not the case right now. Construction spending is near all-time highs, very, very strong, and the number of employees in the construction industry is basically also at an all-time high. So that's a key industry that a lot of times, again, starts to weaken ahead of going into a recession. There's no hint of that today. Okay, now that you know the latest on the inflation front and on the economy, the big question then is, okay, so what does this mean for my money? Well, so far we have not made any changes to clients' portfolios on this front because the stock market had had a very strong 5-month period where the largest sell-off it had in that time frame was 2.5%. We knew that at some point there was going to be a sell-off larger than that. The only question is, what would be the news that triggered this? So far, even with the news that I'm telling you now, the market's only down around 3.5 or 4% from its high just a week and a half ago. So and by the way, next week starts the new first quarter earnings reports from companies. This is going to be very key to hear companies saying what are they seeing as far as the current quarter in demand, what are they doing with their pricing, and we're going to be listening very closely as we do every quarter to find out what are companies from financials to industrials to tech to commodities having to say, and that will guide us in terms of what we're doing with client portfolios. And we'll be keeping you updated as we always do with our next market update here in a couple weeks. Stay alert for that. Take care and thanks for watching. Hey, thanks for watching that video. You heard me talk about a red flag on the inflation front. Hey, if you only hear from your advisor every couple years and they don't make updates to your portfolio, get real advisement, give us a call or go to CenterraCapital.com and go to the contact page. You can have a conversation with an advisor and we can talk about our process to see if you may be a good fit and vice versa. Thanks a lot and take care.